please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's move to some market opinion as well now. And this is a word coming in from Manish Sonthalia of Motilal Oswal AMC. On the road ahead for the Indian market and, of course, the sectors that he likes. He feels that the risk-reward is actually more favorable in favor of mid-caps and small caps rather than large caps at this point.
Really, maybe a 5% more downside is possible on the headline numbers. But my sense is there's excesses getting created on the mid-cap and small-cap side in these sort of markets. So, you have seen deep cuts. The silver lining is that the earnings revival is underway. You are seeing multiple compression. But all the negativities in the markets, whether it be the March syndrome or whether it be, let's say, losing of buy polls in some of the states, or whether it be raising of interest rates, I mean, to a very large extent, these things have got played out in the mid-cap and the small-cap names. I think people are finding it very complacent to log into large-cap names, but I think the risk is clearly on the large caps as opposed to the mid-caps and the small caps currently. This calendar year is already a down year. We are underperforming major global markets. So, but I mean, the whole point is, you get to a point where you can't fall any further thanks to earnings revival. In the past, moderate increase in interest rates along with earning cycle growth has worked positively. So my sense is we are still in, I mean, there's still maybe 9 months to go for, for this year, this calendar year. I would tend to think we'd still have a positive year. Maybe the first half, due to a whole lot of issues, you could see some negativity. But I think once earnings cycle momentum gets reflected fully, you'll start to see that get factored in the markets. I find comfort in the consumer names, the IT, pharma, agri, cement. These would be some of the names which I think will do well over the next 2-3 years, but you've got to wait. It's not that you buy today and you got to start seeing an uptick tomorrow. There's little downside in many of these names which we are seeing currently. People are underestimating the earnings growth on many of the consumer names as we go into the next 1 to 3 years. That's not fully reflected in the valuations, and valuations have also corrected 15-20% in many of these consumer names.